I'm going to share how to strategically guide your business towards sustainable growth. Hey y'all, I'm Lusia Donovan, but you can call me Lou. I started my first business at 19, and now I run and own 6 businesses, one of which I help entrepreneurs, just like you, set the foundation for their business. In this video, I am going to cover the key steps to completing a simple financial analysis for new business ventures, how to conduct a cash flow analysis, and tips on how to analyze investment opportunities that you may be presented with. In my business ventures, I've utilized financial analysis to make informed decisions and optimize my resource allocation. This includes assessing profitability, cash flow projections, and my return on investment that offer the highest potential for growth. By analyzing my financial data regularly, I can ensure financial stability, identify areas for cost savings, and strategically plan for future expansions and investments. I have utilized financial planning to ensure I do not acquire properties or sign up for business ventures where I cannot carry the loan if I do not have an occupant or cover my business operations expenses. This allows me to take my time and get the right person leasing my properties or keeping the doors open to my businesses. Here are the key parts that make up the financial analysis for businesses. The financial analysis process I use includes understanding my startup costs by estimating all the costs required to start my business. Next, I document my revenue projections based on the results from my market analysis, target audience, peak and off-peak seasons, my sales forecast analysis, and my industry trends analysis. Also, as part of this exercise, I also determine the pricing of my products or services that I plan to offer, which entails various consideration points such as my positioning strategy, my target market, my profit margin, goals, unique selling points, etc. I then identify my operating expenses, which includes expenses such as rent, utilities, salaries, marketing, and inventory costs. From there, I determine if I have a funding gap and what type of funding options I will pursue to close that gap. Next, I then identify the payment terms for customers and my vendors. And then from there, I wrap it all up in a nice bow and generate my cash flow analysis to understand the inflow and outflow of funds within my business while considering my customer and vendor payment terms. I've included the financial analysis and cash flow management template in the description below. Conducting a cash flow analysis is essential for anyone starting a business to understand and manage their financial health effectively. You begin by projecting expected cash inflows from sales and other sources, taking into account realistic timelines for customer payments. Next, you want to outline all anticipated cash outflows, including expenses like rent, utilities, inventory purchases, and payroll. Here are some practical tips for analyzing investment opportunities. Analyzing investment opportunities is important for anyone starting a business. You want to begin by conducting thorough market research to understand the industry landscape, competition, and demand for your product or service. Next, you want to evaluate the financial metrics, such as projected return on investment, your break-even point, and cash flow to ensure the opportunity aligns with your financial goals and capabilities. Additionally, you need to consider the potential risks and develop contingency plans to mitigate them, ensuring a balanced and informed decision-making process for yourself. When we ventured into the residential and commercial real estate acquisition and leasing business, we conducted a multitude of financial analysis where we evaluated location, future plans for cities, and leasing potential. Since our initial investments, our property values have increased 70% across our entire portfolio, and our lease agreements are profitable. Doing a financial analysis is key to making informed business decisions and ensuring long-term success. By regularly evaluating your financial metrics, understanding your market dynamics, and planning for potential risks, you can strategically guide your business towards sustainable growth.